All right, this is a one second. This is a video review, trade review of today's winning trade. I'm also going to roughly cover some other things in there, like maybe oil, the mistakes from oil's trade yesterday, um, and then maybe some logic for prior similar trades that didn't work versus this trade. So today, um, So on these left charts are what I'll be to zooming in and out. This is just the 4 hour of the same charts, but that way we can sort of get rid of the drawings, keep it clean. That way I can just note it easily in the video later if I ever review it. But yeah, anyways, just a quick breakdown of the trade. Um, let's see here. We'll go to the 4 hour. So obviously we're at all-time highs, and the way that the dynamic for Dow and Russell was moving was really nice. When I say nice, it was in play for a clear logic for how I trade. So basically, um, yeah, we made new highs. It's always hard to predict the short side. So basically, what I do is wait for a move down um, before I ever want to get short, and I wait for confirmation, obviously, that shorts are working. And so here you can see that shorts were working on Dow versus Russell. So um, we get this initial high here, Russell, which is the all-time high now, which it's going to go for probably today or tomorrow, which was the draw on liquidity for the trade. But yeah, we got this initial pullback. We maintained that low, manufactured liquidity there, and bounced. And then we came down again. This is all irrelevant. Basically, the only key thing is that the Dow Jones took out this high and made SMT, confirming the sell side on Russell, and it worked. And that's basically all I need to see. I need to see something work, and then I can trade it. So it worked. Dow made a new high here. You can see the short worked again. But this time, so yeah, we created relative lows. That initial short, it worked and took out the relative lows, which is obviously a possibility for a long. Um, so just from a liquidity dynamic, we'll cover that first. Relative equal lows, we hit that, boom. There's probably some sort of divergence here somewhere, to get this long, whatever, it doesn't really matter. But we come back up, the short works again. But this time, Dow comes down and we get the change in character. So that's exactly what I look for. We get Dow taking this low out, which is the low. The reason why that's relevant is because that is the low that Russell did after sweeping liquidity for a possible reversal, which it did bounce from already. So Dow takes it out, and boom, we've got a divergence. So there was already the trade. We had the change in character, so I was getting long into here. Some nuance with Russell is that, so yeah, anyways, you could have just gotten long here. Just a quick breakdown. Let me just keep it simple. So yeah, let's just say you got long here. What the fuck? There we go. I had my stop here at that low, draw on liquidity, so it technically hasn't hit, but I mean you would have already been able to squeeze out 3R. And this is a trade to size up because it's so obvious. These take a while to set up, but when they do, it's like the trade of the week basically. So if I stuck with just this type of trading, I would have a really high win rate, maybe 70-80%, and I would always get at least 3R, 4R, whatever. You can see here the real target's at least 4R, 4 and some change. Whether it's going to manufacture this high and pull back and then continue later, it doesn't matter. Oops. So yeah, anyways, that's the logic. So getting long into there. So I was already long. One nuance though with Russell is that it will almost always, before it delivers, basically do the same thing on a micro scale, and it will manipulate or change in character again. And so it'll be like the inverse. And so you can see here we ended up sweeping these lows, which was the low that Dow put in, and started to move away. And Russell was really struggling all night, all morning, and then suddenly manipulates that low. And so we got basically a change in character here, right there, which was all the way up there for the Dow. So anyways, that's just the trade idea basically, in its simplest form. Obviously we swept liquidity, but the reason why this was really powerful, first of all, was because right into this low, we had some very obvious, so this is going to show today's flow, but I'll go back one day to show the prior day as well. Oof, this is huge. Let me just screenshot it because that was, oops, oopsie daisy. Boom. All right, I fucked it all up. I fucked it up, man. I fucked it up. There we go. I'm on my other screen. 1 second. So let me screenshot this just so it's easy to share. Oh, fuck. All right. So Russell did not have bullish flow, which that's why that's why there's nuance to this trade. So you can see here, this is yesterday and this is today. So yesterday we're moving lower in price. The yellow line's the price line. Everyone's moving lower. And then suddenly we get some big bull flows there while we're heading lower. And so Dow is obviously sweeping liquidity, and there's bull flow, and there's everything for a typical long. So everything's there. Normally I do not like to long the one without the flow. I would have loved to long the Dow, and I'm sure I can review this here now and figure out how I could have done that. But well, it might be a little bit more complicated than what we think. So anyways, bullish flow basically confirms the whole thesis that this is going to reverse, and if it's going to reverse and this is the relative strong whatever, then the one that has the flow usually ends up moving way better, which is, as you can see, if I had gotten in here, that would have been nice. Maybe we could argue it was the new week opening gap, look for this low to be taken, and then you could have gone in literally right. Super tight risk, but I can't really argue that because I haven't really back tested that or whatever. But anyways, you can see the risk reward is massive if you can find the logic. Oh wait, that's the wrong one. You could have done it, let's just say there. And I'm sure there's some sort of session. Maybe there is one. Let's look. Let's look. This is why we do the review. So yeah, Asia session, which is what we want to see. We close, Dow sets a low, we close, we gap up, and then you can see here that Russell manipulates below the prior day. Oh, so it's a prior day manipulation. So yeah, you could argue that maybe you could have gotten long in here on the Dow, but without knowing the clear draw on like where Dow is going to reverse, it's besides just the fact that you can trust that daily. I mean, look at that risk reward. That's why nuancing this out can be really powerful. Look at that fucking 10R. Could have went for just a low hanging fruit target, still would have been huge. On top of that, sizing it up because of the probabilities being in our favor. But anyways, you can see here, yeah, AM session open, we manipulate that low, change in character, sweep out all the liquidity. And usually it always goes for the most discount. So if I had been smart with some foresight that the Dow was gonna take this low for a high, just with high conviction that it was gunning for this low, then yeah, I could have ideally waited for just an entry below this low on Russell. So there's many ways to trade this much better than I did because there were issues with my trade management, and boom, another big opportunity there just for entry wise. But yeah, so that's basically it. The other part that made this trade really high probability though is the whole other aspect of this is that um, ES was also taking out these lows as well. And so you can see here, right as it took out the support resistance liquidity right here was exactly where the manipulation happened below this most discount liquidity. So whenever we get the divergence trades with really awesome risk reward, it usually goes for the most discount areas. Sometimes with Nasdaq and ES, it does not do that. It'll fucking SMT and Nasdaq's already so high, and then the risk reward sucks. So that's where really understanding what's the dynamic, such as the one I talked about at the very beginning, where Russell and Dow dynamics were working, and they've always worked. That's not just like a this time thing. That's always the dynamic that really works well for me is Dow Jones and Russell divergences, but only when they have that confirmation of working already, and then obviously the changing characters. So obviously we're long side has been the one that's working. So when this happens on the long side, that's when to trade it, and then confirmation of the flow. We get a divergence with not only the Dow but the other indices as well. So we got like double, triple confirmation showing that this would be the play. I got in so much size that I was able to hit my max win for my consistency rule on my accounts without even having to hold. But as you can see, I could have easily held and crushed it. I mean, this is just what you look for, especially when this manipulation happened. I was like, oh yeah, okay, here we go. And so that's actually what I did. I timed my stop to stop out so that if it was gonna change in character again, which is what it did, I could get in again. And because of that, I was able to get in right at the break of this low, huge size, really tight stop here, and then it just immediately started pumping. And so I was able to put my stop here because if it's gonna come all the way up here, it's not going to just take this one little low out. It's probably going to sweep these lows. So I was really able to manage risk aggressively well for a really big opportunity. You know, imagine if I didn't have a consistency rule, I would have held for a big partial just at the New York Open high, which is what I did, but I probably would have sold less, and then I would have taken some more off at this smooth highs that we took out here into this candle. Um, but then I would have left a huge chunk, you know, another 20% to run all the way up into these highs. And then knowing that we could pull back, you know, we could get some sort of situation up here to manufacture liquidity and not just deliver today because we have to close our trades out by the end of the day because of fucking rules. Then yeah, I would have probably just exited as soon as we got up into these highs here, which still would have been a massive risk reward here. So if you see, if I entered on that low, had my stop there, and I just anticipated we, you know, manufacture liquidity somewhere in here, it's still 9R with huge size, which is like, you know, double your entire account balance easily in a trade with size. So pretty awesome trade. This is literally like one of the trades, the hallmark trades I've always traded that always just crushes. So that's why I wanted to make a video about it. The other one was this long on NASDAQ. So NASDAQ already tapped into the liquidity pool. Usually when there's a big higher time frame order block like this, I don't take them because the risk reward is really bad. But if you zoom in, there is a 15-minute order block right here, and it makes sense that it would bounce there because of the nature of these lows, this liquidity pool. This is smooth lows, but I mean, it's more up here. So it doesn't need to, if you turn your head a little bit, it doesn't need to dig super deep in order to get everyone out. And you could literally enter there with a stop all the way down here or something for really, really low risk reward. But we're in the business of optimizing our trades so we can really make money when we win and then take small losses. So once I can get out of these consistency rule situations, it's going to be awesome. I'll be able to hold big runners, especially trades that are in play. The only problem with this Nasdaq trade is the only logical target is a premium. So it hit that right there. So that's where you really got to justify the risk to reward. But yeah, you could have even traded ES with the divergence there. ES had already swept that out, headed much lower. Then Nasdaq went lower, and then went and diverged at that low, sort of like the Dow did with Russell into here. So you could have used this order block maybe as your risk, and then boom, target just a premium, maybe trailed stops to these swing highs. So yeah, Russell was the Dow and the Russell are the obvious trades. This is just a pattern trade that I've I just see work over and over and over again with high probability, and it really does come down to risk reward and conviction on these like I call it fair value gobble trades. So it didn't even hit the gobble area, which is why the context of the nature of the lows sort of comes into play. But yeah, that's about it for that one. The mistakes I made with oil were yesterday. I mean, I didn't really make any mistakes besides just, yeah, I don't know. I was right about the whole trade. It was simply the fact that I had to close because of the nature of prop accounts, funding accounts, and then I had to close at the close, and then at the open it just gapped away, and I need to build out. Well, ideally, I would never need to do that, first of all, because that's just the risk of having to do that is that we could gap away. And I've seen this happen multiple times. Not enough to be like, okay, I can't make money on this, but enough to be like, I'm fucking literally losing tons of money because of it. So it's very, and then just the psychological frustrations of that, the tilt and the annoyance and the frustration of putting on risk and literally not being able to capitalize on it and literally only having downside risk is like super frustrating. So anyways, the logic for this one was um, just a clear divergence, basically the same thing, the same setup I was looking for, um, except it was a change in character up into a premium. So SPG did not reach into premium, oil did. So, and the nature of where it reached into, I was able to trust this high, um, and get in basically into here for the short. It came down. I was looking for a discount, fell just short manufacturer liquidity. Same thing with SPG. So I was like, okay, I can hold this. Ended up grinding against me all day long, forced to exit for tiny loss, and as you can see, delivered without me. So huge bummer. This would have been another huge win, almost a max win on the day. So that's really frustrating. Um, but I just want to note it because this is an issue that has happened before. I mean, at least one or two times, and losing half R and missing out on literally 10 R at least, probably 15 R. Is that right? No, sorry, 7R. 7R. Missing out on 7R and losing. Am I being retarded? Something like that. Something like that. Just I lost a lot of R based on the opportunity cost, and I paid for it. I literally lost some money holding this. So yeah, very frustrating. I would have just gone out as soon as we took out these relative equal lows, but the real draw was a discount. It was somewhere down here. But anyways, yeah, very frustrating. Um, yeah, that's it. Those are sort of the. Oh wait, there were some longs I took because we did get a similar change in character here earlier this week with the Dow and the Russell. But as you can see, that wasn't actually in play yet because we hadn't taken out the real relevant low. This was like a smaller time frame version of what happened here, and I lost, and it didn't work, as you can see. And I think I did another one here with like Nasdaq or something for the same sort of reason, but it just didn't logically make sense because this low hadn't actually been verified, with the Dow. So you always have to have time frames in context, lows in context with what actually happened, and it's all sort of fractal. You have to have the higher time frame all be in play, and then you continue that logic on the smaller time frame. So that's why this wick down here worked really well. That's why this all worked really well. You could have entered on any of it because of that. So there you go. There's my trade review.